Everybody, it's Michael Martin. Thanks for being here. Happy Tuesday. I'll have ganja tomorrow. So another question and a bunch of comments came up about taking winners and this and that. And so what I thought I would talk about today is that practice and modify, right? I'm not a big believer in mental stops, only because even if you're sitting at your desk, markets can move super quickly and shoot right through where you thought you would want to have your stop or execute an offsetting transaction and remove the risk from your portfolio. And I've had that happen to me. I'm sitting there, all of a sudden, some news thing comes out that no one can anticipate. The market just either takes off when you're short or it dive bombs when you're long. And you're like, man, I'm not doing that again. I know many of you think there's a boogeyman out there and the market makers are in the business of somehow running stops. In my opinion, that's furthest thing from the truth, because, the market makers, why would they want to come and hit your protective sell stop below the market to acquire shares that are going to continue to go down? Nobody makes money when stocks are going down, not market makers, not me, not you. So that the logic of that doesn't make a whole lot of sense. So again, practice and modify. You have a trade, you bought at 20, it's at 25, you're at, maybe 5-1. The best thing to do is to say, look, it's probably not the only time in your life that you're ever going to be there. So now you get to kind of model your own behavior, right? Because now when you enter a trade, your position size, your entry, where your initial protective stop is. As it starts to move in your favor, now you have to do something that's behavioral, because heretofore it's been theoretic. So the thing starts to move in your favor, and that maybe you only want to risk $1, right, below any previous, high while you're in the trade. So once the thing goes to 21, maybe you move your stop to break even. If it goes to, 22, then you put your stop at 21. Now you can't really lose money. And then kind of trail that stop accordingly. Keep in mind that $1 move on $20 is 5% move. There's places that advocate, 7, 8, 9, 10% move against you based on the instrument's price. So you'd have to position size accordingly. But I think in order to get comfortable with it, it's not, your comfort level's not going to come from the theory behind it. It's going to come from you're actually doing it and feeling comfortable with it after the fact. Right. So don't beat yourself up if you didn't get out on the top tick, because when you're in new or high ground and you have a winning trade and it's an unrealized gain where you have a protective stop below the market to offset the trade, again, you're long, you want to be in the moment and feel all the feelings that you're going to feel within that experience. I know people who have an extreme amount of anxiety when they're actually in a winning trade, because they don't know what they're doing as far as taking profits. And we talked about that last week. If you take small gains, you're going to always be a small trader, because it's going to take you forever to grow your account. And you could do what you want. I'm not saying that you're an idiot or you're a loser. I'm just saying that if you constantly take super small gains, you'll get the dopamine hits for sure, but you're not really going to grow your account. And then when you count in all the exchange fees and even the super discounted commissions, you got to ask yourself, what are you doing it for? Because it could be said on some level for the folks who are constantly in anxiety that their trading is really just a mechanism to help them process their feelings around anxiety. The making and the losing of the money isn't really the issue here. And so it gets super deep. But again, practice and modify. It's okay to practice with real money and see how it feels. You can always make an adjustment the next time you're there, right? Because it's hard to do on paper, because there's no risk. And we talk about embracing the uncertainty. We talk about the folks who are long still NVIDIA after it spiked up and it's pulled back, quite a bit, 10% or whatever. And maybe they have thoughts that it'll go to 1,000 before splitting, maybe it will, but they have to hang on for dear life, while the ride's on. And that's, they have to calibrate their system for that. And so what I'd like you to try to consider is open yourself up to the possibility of having big gains. Because once you have experienced it, don't think about the theory. The theory is bullshit. Theory is just gets you in the game. It doesn't mean anything until you can execute. And I want to hear about how you're taking 10 to 1, winners. That would make me feel good. Because look, folks, I don't necessarily think I have all the answers here. But if you're in a peer group and all they do is do 9:30 Eastern to 4 o'clock Eastern day trading stuff, you don't have a voice of reason, right? You don't have someone who's giving you the outside looking in kind of arguments. It's not calling your girlfriend ugly. It's just saying that there's other ways to look at the markets. There's other ways to look at trading. And you're going to have to look at your behavior for the work that you're willing to do so that you can get out of it what it is that you think you want. But until you experience it, then you just have an opinion. And I don't care about opinions. I've got the data, right? So I don't want to sound that way, but most of the if I'm speaking off the top of my head, it's from real life experience where I'm making more of a statement on things. It's because I have the data. Now, you might not have enough experience in the marketplace yet to have that type of data on your own behavior. You'll get there, right? If you stick with anything long enough, you'll totally get there. I have a lot of faith in you. But in order to learn how to handle winning trades, the best thing to do is to find yourself in those winning trades more frequently than not. Don't cauterize them just because they get to 2 or 3R, right? Have a theoretical plan coming into it and say, okay, if I get to 3R, instead of offsetting it as the winner, I'm just going to move my protective stop to plus 2R. I'm going to sit on the trade, see how it feels, right? Because it's not going to kill you. You're guaranteed to make money. It's a question of whether it's going to be, 2R. And then if the trade goes to, how many times did you see like the market's up and then it kind of coasts through lunchtime into the early afternoon, not a lot happening, and then it rallies into the close, right? You were already in the winning trade. So that's what I'd like to see is you hang on, have a little bit more faith in yourself, trust your protective stops, and let the winners run, because you'll make more money for the work that you're already willing to do. You see, that's exciting for me to try to think about helping you see the other side of things that you might not see through your peer group or some of the things that you're subscribed to, whether they're free or they're premium or this and that. So you'll get there. You'll totally get there, and it'll be a very valuable experience, because then it becomes habitual. Next thing you know, you're in a 5R, you're up 5R. It's an unrealized gain. You're going to know from experience now how to handle that. It's not just theory anymore. So then you're going to get used to it. You won't have the anxiety, right? The uncertainty is really not going to be any more uncertainty than it was when you put the damn trade on. So then you're going to be surprised when things can go to 6, 7, 10, 12R, right? Think about the feelings that you would have if you could get there. If you cauterize everything at 3R, you're never going to have an 11R. It's going to be hard to fathom that, because you're going to have so much anxiety about being in a winning trade and having some kind of irrational fear of losing the unrealized gain and having it go back to zero, right? The key is, in practice, knowing when to start moving your protective stop up, right? You can't be in something that you bought at 20, your protective stop's at 19, and it goes to 25. Your protective stop can't still be at 19, right? So you have to come and do that as well in practice. And so that's, again, something that you can live with and work through over time. It'll happen for you, right? So again, I would not use mental stops. Markets can move very, very quickly. And to reiterate what I said yesterday, I would definitely think about trading across 12 or 15 markets using one strategy, than trying to have, 15 different trades, and trying to make something fit on a market that's not moving. You see what I'm saying? Anyway, we'll be here tomorrow with Ganja. We're going to talk about that study, and then I'll be here by myself for the rest of the week. Thanks very much for being here, folks. I'll see you tomorrow. Okay, everybody, thanks for being here. Please take a minute, like and subscribe to the show. You could also leave a comment. I don't have all the answers, so it's good to get some feedback. Also, if you would like to support the show, check out the links below. You can get the free audiobook of The Inner Voice of Trading, and also information about the course that I teach with Victor Sperandio. Thanks for being here, folks. I'll see you tomorrow.